For most of history, empires rose by conquest. They expanded by force. They ruled by fear. They collapsed when that fear faded. But in the early medieval world, something very different appeared. An economic system that did not rely on walls, did not depend on a single capital, did not require one empire to rule it, yet it connected more land, more people, and more wealth than any empire before it. This was not an empire of territory, it was an empire of trade, and it stretched across 3 continents, from Spain to India, from North Africa to Central Asia, from the Mediterranean to the Indian Ocean. This was the world shaped by the Islamic Golden Age. When the early Islamic Caliphates expanded, they did not inherit an empty world. They inherited fragments of Roman systems, fragments of Persian administration, fragments of Greek knowledge, fragments of Silk Road trade. What they did next changed history. Instead of destroying these systems, they connected them. Instead of ruling only through conquest, they ruled through coordination. Trade routes that once ended at borders were reopened. Markets that once served empires were linked together. Currencies that once stayed local began to circulate widely. For the first time since the fall of Rome, a truly integrated economic world reemerged. But this integration did not happen by accident. It was built. The Islamic world sat at the center of the known world. Between Europe, Africa, and Asia, every major trade route passed through its cities: Baghdad, Damascus, Cairo, Cordoba. These were not just political capitals, they were financial engines. Merchants from different religions, languages, and cultures met in the same markets. They traded under shared rules. They trusted shared systems. This trust did not come from armies. It came from law. Islamic commercial law standardized contracts, defined partnerships, protected property rights, enforced obligations. For merchants, this was revolutionary. They no longer needed to rely on personal relationships alone. They could rely on a system. And once a system exists, scale becomes possible. Money itself evolved again. Gold and silver coins circulated widely, but merchants rarely carried large amounts. Instead, they used written instruments, bills of exchange, letters of credit, early forms of checks. A trader could deposit money in one city and withdraw value in another, hundreds or thousands of miles away. No empire had to escort it. No king had to approve it. The system worked because everyone benefited from keeping it stable. Risk was shared. Profit was divided. Trust was preserved. This created something new in history, an economy that could survive political change. And when dynasties fell, trade continued. When borders shifted, markets adapted. When rulers changed, contracts remained valid. This is why the Islamic trade system endured for centuries. It was not tied to one ruler. It was not dependent on one city. It was not fragile. It was resilient, and that resilience made it powerful. European kingdoms at the edges of this system noticed something troubling. The wealth of the Islamic world did not come only from land or tribute. It came from movement, from circulation, from finance, from networks that stretched far beyond any battlefield. While European rulers fought over territory, Islamic merchants financed trade across continents. And while kings borrowed to wage wars, traders invested in routes, ships, and partnerships. Power was shifting again, away from crowns, away from castles, towards systems that managed value itself. And this would not stay confined to the Islamic world. In the next part, we will see how this financial system quietly reshaped Europe, how Christian kingdoms learned from it, how Italian city-states adopted it, and how modern banking was born directly from these ideas. The success of the Islamic trade system did not go unnoticed. At the edges of this vast network, Europe was watching. For centuries after the fall of Rome, Europe was fragmented, trade was local, money was scarce, kings ruled land, but struggled to generate wealth. Meanwhile, to the south and east, something very different was happening. Cities like Baghdad, Cairo, and Cordoba were thriving. Markets were busy, knowledge was flowing, money was moving efficiently across vast distances. European rulers saw the wealth, but they did not understand the system behind it. So they did what rulers always do. They tried to imitate the surface, not the structure. They minted coins. They levied taxes. They fought wars to seize trade routes. But without the underlying financial system, it did not work. The real transformation began not in royal courts, but in merchant cities: Venice, Genoa, Florence. These were not large kingdoms. They did not have massive armies. They did not control huge territories. But they sat at the crossroads between Europe and the Islamic world. And they learned. Italian merchants traded directly with Muslim traders. They adopted contracts, accounting methods, and financial instruments. They learned how to move money without moving metal. Double-entry bookkeeping emerged. Bills of exchange became common. Credit replaced coin. A merchant in Florence could finance a shipment to the Eastern Mediterranean, sell the goods through intermediaries, and settle accounts months later without ever touching gold. This was revolutionary for Europe. Money stopped being something you stored. It became something you managed. And once again, power shifted. Kings needed money to fight wars. Merchants had systems to generate it. So kings borrowed. At first, borrowing was temporary. Then it became permanent. States began to rely on merchant bankers. Wars were financed with credit. Debt became a tool of governance. This is the moment when political power began bending toward financial power. Not because bankers ruled armies, but because armies could not exist without money. The blueprint was clear. Trade networks create wealth. Financial systems sustain power. States that ignore this fall behind. This pattern repeated again and again. When rulers respected trade, economies grew. When rulers interfered too much, capital fled. Money did not fight back. It simply moved. The Islamic trade system had proven something fundamental. You do not need to conquer land to shape the world. You need to control how value flows through it. By the late medieval period, this idea was embedded deeply. Empires rose that depended less on direct conquest and more on financial coordination. Colonial powers emerged that ruled oceans rather than borders. Companies gained influence once reserved for kings. The logic of the Silk Road lived on. But the world was changing again. Trade was expanding faster than ever. States were growing more expensive to maintain. Debt was becoming permanent. And that pressure would force the next evolution. In the final part, we will see how this system transformed into modern global finance, how institutions replaced empires, how money became abstract, and why the ancient logic of trade without borders still governs the world today. By the early modern era, the logic of the Silk Road had changed the world permanently. Trade was no longer just about goods, it was about systems. Money was no longer just metal, it was information. And power was no longer held only by kings, it was held by those who controlled flow. European empires expanded across oceans, not because they were richer than everyone else, but because they had learned how to finance expansion. The Dutch did not conquer the world with armies. They conquered it with balance sheets. The Dutch East India Company was not just a trading firm. It was the first corporation with shares, debt, and global operations. Investors funded voyages. Risk was distributed. Profit was abstracted. A single company could influence nations. Then came the British. Britain did not dominate because it produced the most goods. It dominated because it controlled trade routes, insurance, shipping, and finance. London became a global clearinghouse. If you wanted to trade, you needed access to British systems. If you wanted protection, you needed British credit. If you wanted stability, you needed British approval. Empire was no longer about borders. It was about integration. And this idea did not disappear when empires fell. It evolved. In the 20th century, physical trade routes gave way to financial ones. Banks replaced caravans, cables replaced camels, institutions replaced emperors. The same logic applied. Whoever controls settlement controls power. Whoever controls credit controls growth. Whoever controls trust controls the system. After World War II, a new Silk Road emerged, not across deserts, but across balance sheets. The Bretton Woods system tied currencies together. The dollar became the anchor. Trade flowed through institutions like the IMF and World Bank. Again, no empire conquered the world directly. The system did. Nations that integrated thrived. Nations that resisted struggled. Money moved faster than politics. Capital crossed borders governments could not. And once again, power followed flow. Today, we live inside the most advanced version of the system ever built. Goods move instantly. Money moves invisibly. Trade happens at the speed of light. Yet the logic is ancient. Trust still matters. Networks still matter. Flow still matters more than force. Countries that position themselves as hubs prosper. Those that isolate fall behind. This is why sanctions work. This is why supply chains matter. This is why currency dominance shapes geopolitics. The Silk Road never disappeared. It changed form. It moved from land to sea, from sea to wires, from wires to algorithms. But the rule remained the same. Control the flow of value and you shape the world. This is the lesson hidden beneath history. Empires collapse when they try to control people instead of systems. Power lasts when it understands how trade really works. And that is why the future will not be decided by borders alone. It will be decided by networks, by finance, by trust, and by who understands the old rules in a new world. If you want to understand how money, power, and history are truly connected, this channel is for you. Subscribe, because the stories they never teach are the ones that shape everything.